Welcome to Pro News Weekly. Let's look at the latest developments in the financial markets. The US dollar is holding its ground, stock indices are cautious, central banks are selling gold, and Bitcoin is dependent on a single player. The US dollar retreated as the odds of a year-end rate hike slipped from 57% to 52%, which was reflected in lower Treasury yields. Separately, equities were lifted by NVIDIA's first quarter results and the SpaceX IPO filing. The minutes of the April FOMC meeting showed that most officials are ready to raise rates if inflation persistently runs above 2%. At the same time, the overwhelming majority believe that bringing PCE back to target will take longer than previously assumed. As a rule, a Fed pivot toward discussing rate hikes pushes Treasury yields higher and strengthens the dollar. This time, however, it played out differently, as markets saw that the central bank does not intend to ignore inflation. In any case, over the medium term, expectations of a Fed funds rate hike remain a bullish factor for the U.S. currency. The drop in Treasury yields was helped along by the largest Brent sell-off in 2 weeks, triggered by Donald Trump's comments. The president stated that the U.S. is in the final stage of negotiations with Iran. AI giant NVIDIA tripled its net profit to $58.3 billion and increased its profit margin from 61% to 75%, compared with the same period last year. Interestingly, while the company beat expectations by around 3 to 5%, it wasn't enough to deliver the wow factor investors were hoping for. This may be due to rising expectations, or perhaps the markets are becoming more cautious as warning signs increase. According to a Bank of America survey, investor exposure to U.S. equities jumped from 13% to 50% in May, the highest level since January 2022. At the same time, cash holdings fell to just 3.9%, their lowest level since February 2024. Growing optimism has also pushed the cost of downside protection on individual stocks to record lows, suggesting investors are becoming increasingly comfortable with risk. Some analysts warn this level of confidence could signal overheating in the market, especially with the S&P 500's forward price-to-earnings ratio now sitting at 20.7, above the 10-year average of 19. A similar situation of extreme price-to-earnings ratios and high market concentration was observed during the dot-com bubble. The dollar's retreat and falling Treasury bond yields have allowed gold to find its footing. Regardless, interest in the precious metal is being eroded by yields on key government bond markets, which are at their highest since 2008. Pressure on gold was also provided by news of Russia's gold sales, which have reduced its reserves to 73.9 million ounces, a 4-year low down by 900,000 ounces, or $4.3 billion since the start of the year. The fate of gold is closely linked to the conflict in the Middle East. A de-escalation would lead to a fall in oil prices, lower inflation expectations, and lower Treasury yields. At the same time, the US dollar would weaken. According to the private bank Lombard Odier, this scenario would allow the precious metal to soar to $5,400 per ounce by the end of the first quarter of 2027. Whilst investors are still trying to work out whether Bitcoin belongs to the risky or the safe asset class, its price is determined by supply and demand. In 2026, the cryptocurrency has regularly defied correlations with stock indices and gold. Over the past 12 months, the Bitcoin price has fallen by a third. However, the situation could have been worse. Since the start of the year, Strategy has acquired over 171,000 Bitcoins, more than double the 62,000 coins mined during the same period. In the week leading up to the 17th of May alone, Michael Saylor's company purchased $2.01 billion worth of cryptocurrency, operating on a scale unprecedented in its history, whereas previously the price of the leading cryptocurrency was determined first by idealists and speculators, and then by holders and institutional investors. Now around 70% of demand is generated by a single company. This allows 10 times research to argue that attempts to determine Bitcoin's price by analyzing the macroeconomic backdrop, the Fed's actions, or ETF dynamics are misguided. The key events on the economic calendar for the final week of spring will be the releases of data on US GDP, durable goods orders, and the Personal Consumption Expenditure Index. Following the acceleration of consumer inflation to 3.8% in April and producer prices to 6%, PCE growth is also expected to rise significantly. This will allow the central bank to continue discussions on raising interest rates. The futures market suggests a probability of just over 50% that this will happen in 2026. Outside the US, Australian inflation and the Reserve Bank of New Zealand's meeting will be of interest, where it is expected to keep its key rate at 2.25%. Geopolitics will remain firmly on investors' radar. Donald Trump has stated that the conflict in the Middle East will end very quickly, and that Iran is very keen to strike a deal. The US president has hinted that everything will be resolved by the end of May. However, he has made similar comments before. Markets should be prepared for one of two outcomes: de-escalation or escalation. Keep up to date with global market developments in Pro News Weekly. Like, share, and subscribe.